Oil was at the center of events in the month of March. The world uses 100 million barrels of oil a day. It matters, right? We've gone from some $7 a barrel at the beginning of March all the way to $112 at the end of March. Let's talk about how this affects the global markets and Nigeria as a whole. Oil has risen by 45% month to date and a whopping 86% year to date. What is the driver? Majorly geopolitical tensions. As the geopolitical tensions continue, the war is currently at a 32-day mark. At this point, we've seen 20% of the world's supply of oil being cut off. The price of oil has shaped energy costs, FX flows, inflation, and most likely monetary policies in 2026, putting the entire world in a risk of sentiments. With the continuous geopolitical tensions, we expect that oil prices continues its rise, and this would eventually lead to some form of cost-push inflation. The continuous geopolitical tensions would continue to feed into oil prices, and this would eventually lead to cost-push inflationary pressures globally. Nigeria February inflation figures printed at 15.06 from 15.10 in January. Seems like a drop, right? Yes. However, the monthly figures show a different picture. Month on month, the figures printed at 2.1 versus a deceleration of 2.88 in the previous month. The major propellers for the decline we saw year on year is reduction or moderation in the core inflation. This was driven by largely stable energy prices over the review period. Compared to where we were in 2025, energy prices stayed slightly above 1,000 naira per litre compared to about 1,200 in 2025. With the planting season just underway, food inflation experienced a sharp rise to 12.12 from 8.89 the previous month. This is one thing we'll be watching in the coming months. We expect the March inflation figures to print higher, reflecting the continuous food supply constraints and rising energy costs. System liquidity remained buoyant in the month of March, averaging 6.9 trillion daily. Market traded at the floor of 22%. We expect that this will continue into the month of April. Whilst the CBN conducted some OMO auctions within the month, totaling around 6.2 trillion, markets still remain buoyant. We expect that in the coming months of April, markets will still remain largely liquid, barring any other shocks. With the next monetary policy meeting holding in May, we do not expect the market to trade significantly higher than the 22%. Whilst markets expect 6.9 trillion in coupon payments, NTB and OMO maturities, excluding FARC, markets is expected to still remain largely buoyant. Markets is expected to remain liquid irrespective of OMO auctions and FX interventions within the period. The DMO held 4 NTB auctions in the month of March, with subscriptions at record high, indicative of high interest in the Nigerian Treasury Bills space. The 364-day paper witnessed the highest subscription, with the stop rate closing at 16.73 at the beginning of the month. However, towards the end of the month, we saw that stop rate drop by 30 basis points to 16.43. In the month of April, we expect DMO should be able to sell at current levels of 16.4, given the reduced NTB maturities in the month. The March bond auction had a subscription of 930 billion versus the 750 billion on offer. Whilst this was significantly lower than the 2.69 trillion in the prior month, the DMO sold just about 473 billion out of that subscription, with the 2030s closing at 16%, the 2032s closing at 16.15%, and the 2033s closing at 16.64%. In the coming months, we expect DMO to increase the supply of bonds post the signing of the 2026 federal government budget. In April, we expect continued geopolitical tensions in the Middle East to determine the course of markets. In a case whereby there is escalation, we expect that the sovereign risk premium is increased, the borrowing cost of emerging markets like Nigeria is also increased, and this will feed into the market. In that case, we expect higher inflation, higher borrowing costs, and higher yields. On the local scene, we expect investors to demand for higher returns to compensate for the increasing geopolitical tensions. We expect the NCB auction to close around 16.4 to 16.5 within the month. In the bonds market, we expect April to trade largely bearish, driven by reduced FPI demand and increased supply from the DMO. At FSDH Merchant Bank, we are committed to being your partners on your journey to financial success. Our services cut across different financial assets, including credit and liquidity management, securities trading, and bespoke product solutions, amongst others. My name is Princess Iriroba. I head the fixed income trading desk at FSDH Merchant Bank. This is FSDH Merchant Bank. Together, we achieve more.